Good morning, gentlemen.
Good morning.
What's going on?
How are we doing on this fine, 2021 January day?
Cold and rainy down here.
Cold and rainy?
I hope people also watching today because they should see you today. I know some people listening, but if I recommend people as well to go to our YouTube to check how Will's looking today because it's it looks different. Let's call it this, but it's for sure. Check it out.
Yeah, it's not my normal Monday hoodie. I decided on the look good, feel good model today would be pretty new to try out. I haven't worn anything pretty nice in a while. So
you're off brand, Will.
I'm off brand. As a branding guy, that hurts, Michael. That hurts me. All right. Well, good morning. That's true. Well, good morning, guys. I'm excited for this episode. We're talking about the money. Where's the money? Show it to me. It's going to be interesting. I'm not I guess I'm not in the scene of acquisitions and equity and VC. This is all kind of a new world for me. So I'm excited to really hear what you guys have to talk about, and as well as chime into the conversation when I see fit. So I guess the best way we could start this episode, actually, how's your guys' week before I kick it off into, Bidruption and what's with all the noise?
We can fast forward through last week. Let's just kick it off.
Didn't happen?
It looks like the preview was yesterday for me. It really goes so quick, but it's a lot of starting, right? New targets, new goals for this year. So, but yeah, that's still preparation. Don't look too much back. Look more to the front, to the future.
I get it. Positivity is what we want, right? So always. I'll kick us off. We'll get into the Bidruption Report, and then we'll kick it off with what's with all the noise.
Yeah, this time I'm not going to do a typical travel startup, more another company actually, which has actually took over quite of the events industry. Many of you might know Hopin. Actually, they started in 2019. They did some investments round, and we talk about money today. If you're looking at what they did in February of 2020, they did this first 6.5 million. Then they raised another 40 million, I think somewhere in June. And then in November, they raised another 250 million euro in November. So this is for sure. This is a company which actually is helped by COVID. You can see everything moved to online. So they grow enormously. You can check out the numbers, but it's insane how quick they grow. And actually, recently they bought StreamYard. It's also the platform we're using now to broadcast this podcast. So they acquired them actually for 250. So they raised 125 million. Sorry. And then they bought a company for 250. So for sure, there's a big part is done in equity to get a team of StreamYard and to get their technology for running and involving it and implementing for sure in Hopin. But it's enormous. It's quite impressive. If a company started in 2019, I think the valuation of their last investment one was over 2 billion. So it's cool to build a unicorn or even a double unicorn in this case within a short time. So it is an industry which grows super quickly. Of course, we all know the online events and everything. So is the valuation realistic? Not sure. We can discuss about it for sure. I think it's 2 million. I think we're in the peak now. I'm not sure if it will ever stay as big, the whole conference is how it is. But for sure, it's impressive to see that a company within a short time frame actually starting in 2019 become worth more than 2 billion actually in nowadays. So the startup of the week is Hopin, an online streaming platform. I hope I explained it well. They're creating virtual events, as you can see now on the screen, and might some of you used before. So this is startup of the week. For sure, choose next week again a real travel startup. But I think it's interesting to mention also that around the whole hospitality events, new platforms popping up. So again, Hopin, congrats with being the startup of the week. Another topic as well, what I'm addressing is the events. Well, we all know that January is not really particularly the month for events. What is interesting to already announce, I will do it again probably next week on the 22nd of January. I'll be on TV in the Netherlands We joined the Young Business Award that was recorded, so I see myself in 11 days from now. I see myself on TV to pitch in there. We might see if we come to the final. So I'm looking forward to see myself on TV. It's a bit strange, of course, but it's also really exciting to see myself in there. And I think next week starts some elections as well for the User Crota event. We won the award for the last 3 years. So yes, there's some pressure on us. We won the Startup Award for the last 3 years, and there, hopefully, we're going to win again. Maybe different category, maybe the same. But again, let's fingers crossed. And that's my Bidruption report for this week. Thank you.
Good morning, and this week we're going to be discussing, generally on the show, the influx of capital that's both coming in or on the sidelines. But there's two articles in particular that caught my eye this past week. One of them is that global PE firms are sitting on more than $1.5 trillion of capital that's on the sidelines waiting to be deployed. I think we all are anxiously awaiting the markets to dip in some ways, because it makes no sense that they're at all-time highs during a pandemic where unemployment is at record highs. But I think they're looking for opportunities both in real estate and in technology. And there's a good likelihood a lot of that money is going to start to be deployed in 2021. Aside from private equity funds, venture capital is also supposed to be at a record high in 2021, with primary focuses on high growth tech companies. And obviously the pandemic has forced high growth tech companies to grow even further. So I'm curious to see, a year from now, can those high growth tech companies retain all of their users as life hopefully returns kind of back to pseudo-normal. We'll see, but there's good news for companies that are growing during the pandemic. I would suspect to see a lot of companies announce raises or acquisitions like Michael was sharing with us coming up in the near future, and getting 2021 kicked off and hopefully ending this year on a really high note, with growth, with funding, and the wins at the back of sales. You can put a suit on, but you can't take yourself off mute, huh, Will?
Dang it. Yeah, no, I was trying to make sure there's no echo during the intro, so my bad. But no, I was going to say I agree with what you're saying. I think we kind of talked about this off camera earlier in 2020 about the amount of acquisitions and I guess what do you call it when there's a lot in one market, but then you start acquiring stuff and it kind of shrinks it down a little bit. Consolidation. There we go.
This is the mergers.
Yeah. So I think it'll be interesting to see how 2021. Talking to a mutual friend of ours, Will Perry from Altito, we were even talking about just the I guess the beginning of 2021 is not looking great, obviously for the world, but just in the general Q1, Q2 sense, and then it'll be interesting, like you said, ending on the year on a high note in Q3 and Q4 with a lot of these companies coming out with funding and of course even probably being acquired.
Yeah, I mean, I think
as well, right? You can see more and more companies, instead of like growing their market share, actually they're also acquiring companies to create added value. So I'm curious what's going to happen in there, right? You see, of course, Booking.com acquired whatever some renting platforms for Open Table, and then otherwise it goes into activities, etc. So I think it's a lot of companies as well. They say, okay, how can we become more relevant? How can we create more value? I think in the past it was more different. You want to create more market share, right? So your competitor, you took over your competitor. So I'm curious to see is, for example, are hotel chains buying, for example, co-working spaces? Is indeed Marriott buying WeWork? Or we'll see. I'm really curious what's going to happen in this industry. I think more that it also will be added value, so more services adding to companies. You might see some mergers as well in the same areas, of course, but I think also there will be interesting acquisitions going on. And you can see there's still companies or private equity companies or which has cash. Then you see the companies are running out of cash, so they can acquire them cheaper than before. I'm really curious of what's going to happen coming year. You see a lot of money comes available, like more in investments recently. Many of them were in vacation rental. If you see in the platform like the Sonders and stuff, and if you check in Crunchbase or any platform where you can see some investments, many are in connectivity, technology, or they're in vacation rental. So we with Bidrum also, we're planning a new investment round beginning of this year. Try to close it in the second quarter, so we have quite some interest. So this is also what we're looking into now. Okay, are we going to a strategic investor to grow our user base? Are you going to really go for cash? It's always the consideration, right? And it's interesting to look into what is the approach. There's also interested in acquisitions stuff. So it is also, I love this topic. I just try to read a lot about it and to see what's happening. And sometimes it's surprising, right? Sometimes you see there is a company acquired with just, well, I'm not going to mention names, but they just have, for example, just some email addresses and some users, and they acquired for quite a lot. And then you see people, like companies which just has a lot of infrastructure and technology and everything, and they're just failing or they just bootstrapping, etc. So it is interesting. I think it's also just the right people, right place. It should be complementary of helping the other business. So I know what you have to say, Michael G, but I'm really curious what's going to happen this year in the money in hospitality.
Yeah, look, I think to spew two cliches at you guys, it takes money to make money, and the rich get richer. I think that's what's going to happen this year. And I mean, personally, and this is my views, this is not me giving any financial advice to any viewers, so disclaimer, but I've invested in the market leaders of each segment. So Marriott and hotels, Delta and airlines, Norwegian cruises and cruise lines. Like, the rich will get richer. And as the segments, all of these segments are depressed right now, the market leaders are going to rise, and the market losers are either going to get gobbled up or go away. And we're going to see that across the board this year, where consolidation is going to happen. People are going to buy their competitors. They're going to eat up market share, and the winners will win, which is not a bad thing in general. It's the evolution of capitalism, but it's just been lit with gas in 2020 and 2021. And to piggyback on a point that Michael started to take, I think there's some fun adjacent acquisitions that could happen if you look at market trends and what's here to stay or what's not. I know Booking and Expedia both use Blue Jeans as a video streamer or video conferencing call. If they want to hedge their bet against business travel returning or not returning, that probably a pretty good acquisition to take a look at. Michael mentioned WeWork and Marriott. Marriott's got a bunch of rooms that are vacant, and WeWork has a bunch of office space that they're paying for. Why not team up and turn a lot of that office space turn a lot of hotel rooms into office space? And to stay on theme of this show, flexibility of being able to turn units on and off is crucial. And people still like to have an office to go into. And there's no better spot during a pandemic than a hotel room. Like, you're totally separated.
Yep.
And then Amazon loves subscriptions, and our friend Michael over here is living that subscription life. So Amazon getting into travel. Bezos, if you're listening, Michael here, I'm sure would answer the phone if you call. But the price is twice as much for you as it is for anyone else. So.
Well, it's interesting. Actually, Skip wrote about us some time ago, and they mentioned us as the Amazon Prime from the hotel industry or the hospitality industry. So it does make sense. So if Jeff Bezos want to phone me, we can figure that. We can discuss. I know it will be tough negotiations and stuff, and I know he's maybe pissed because he's not the richest person in the world anymore, as he's passed by our friend Elon Musk. So I'm not sure. I hope he's in a good mood, because of course to be number second, I don't know if it's how does it feel, right? But
well, I was gonna say Bidrum's the Amazon Prime of subscriptions. I was gonna say Bidrum's the Amazon of subscriptions, but you're the Elon Musk of subscriptions as well. So it's like you're playing the two worlds right there.
Yeah. Well, unfortunately, I don't have the cash, but they have together, just not yet. No.
Yeah.
No, but it's a nice combination. But indeed, when you see, it's like it makes sense, right? You see in the industries, if it's complementary or make each other stronger, it could make sense. And you see that maybe WeWork is struggling a bit, and it could make sense to do move like this.
Well, I was going to say the value add, that piece that you were talking about, I think is going to be pretty critical. Just like as we saw, like Wyndham acquired Travel and Leisure. You know, to me, for $100 million to acquire a digital marketing business or platform, that was a little out of the blue. But I think at the end of the day, when we're talking about, you know, the rise and recovery of hospitality, it's not just about eating up your competitors. It's about adding pieces that you can deploy as different, like you said, value adds. So, you know, 2023, 2024, when hopefully the world's kind of recovered and the economy starts getting up and unemployment's down and, you know, all the other factors that lead into a healthy industry, it'll be interesting to see what they do with these tools and acquisitions that have now become value adds.
What's often a trend what you see is like Lonely Planet was sold as well. Right? So this is a few months ago, so you can see content in travel, and as it becomes then kind of popular, maybe they were also in the running to see if they could acquire Lonely Planet. Not sure, but it's interesting to look. Is okay, content becomes interesting. Okay, are there more acquisition? You see more in other fields as well. You see, for example, when TravelClick get bought by Amadeus years ago, you saw the channel managers become popular again in investing or acquiring. So see that I think it's also often a trend, right? When you see they're following each other. I mentioned, I think in the previous episode, if VCs are really on top of what's going to happen and they try to see trends, and if there's a trend appearing, you can see, okay, they don't want to miss the if number gone and one is gone, maybe try to get number two. So there's a lot of things happening, and I'm really curious what's going to happen in all spaces. And again, I think some strong ones, they can come out strong. They're acquiring the small ones. We also get approached in the past, like, okay, can we get your team, because we actually need in our corporate segment, we need people with like the new with new ideas, fresh, etc. So I think there's also, you can see acquisition just only done for team, for people as especially startups, that the CVCs or corporates are going to buy startups just for their team, right? Okay, just a different way of thinking, agile thinking, etc. So this could be also a trend that the corporates who are missing actually what they see now, that they're missing this agile working or missing some skills, just going to acquire companies just for team.
No, it's good point.
Well, the Travel and Leisure one, Wyndham's already announced they're going to rebrand to be Travel and Leisure. Like, it's a great brand. I'm sure they were spending a lot of money on their marketing, but yeah, $100 million for a print media seems a bit excessive.
So Wyndham Destinations itself will become Travel and Leisure?
That's what I read. That
interesting.
They will rebrand it to Travel and Leisure.
Interesting. That would be interesting. Like you said, great.
And they keep the brand, keep the Travel Leisure, and they're using this this brand for the consumers and for the users. Yeah, interesting.
Yeah, it makes me. One of my PR friends brought up that article to me when we were both all talking about it as well, and it made me think of, you know, what is it going to look like for advertising and like their awards. You know, are they going to continue the awards that they do? And then, of course, advertising. If let's say IHG or somebody wants to advertise with them or has advertised with them, Will it be at a premium price now, or will it go into sorry, this is we can deny the competitors the opportunity to get in as well. So it'll be interesting to go and see, but I don't think they would, because it makes no sense to turn away money. So
no, they won't. They'd be silly to do that. You don't want to buy a $100 million company and then cut off their revenue streams.
Yeah.
But the better question is, will IHG want to advertise with them, knowing that Wyndham, now Travel and Leisure, will have all of the prime spots, and they're really going to be self-promoting. So
yeah,
that's an interesting one. It's I don't know a good comparison, but putting your competitors as customers makes it challenging to run business.
Yeah. It's gonna be weird, right? Because it goes in the pockets of Wyndham at the end, right? And if you're opening the magazines or even online, all their sponsors and everything it's mainly hotel in hotel industry, right? You can see it's luxury hotels and brands, etc. So indeed, are they still going to advertise in there? It is not. If you're looking at a Lonely Planet, they have a lot of information, content, and they're more neutral, independent. So it is a different image. But indeed, when something becomes really owned by Wyndham, which is a brand, which is a direct competitor from IHG, Marriott, etc., I don't know. Are they really going to spend their money in there? I'm not sure. I'm curious.
Yeah, we'll see how that goes.
I don't think so.
Michael, as the hotel expert, how long until Marriott's competitors, obviously Accor is now starting to do some short-term rental stuff, or in a bigger way at least. How long until Hyatt and IHG and Hilton start to get involved?
I think they're already busy in preparation on this, right? They can see the trend. I think they're looking at the right moment. You see also in partners we spoke in the past, some of them, even though it's not particularly the same topic, but sometimes they're preparing for 1.5, 2 years to make the right move in the right time, because for them timing is important, right? They have their partnership, they have their image, etc. So I think timing is important. I think also the way, if will be an acquisition, right? What they will do. You can see, of course, One Fine Stay in the past with Accor and everything. So I think when they do an acquisition or want to go into short-term rental, it must be something which fits with them, right? If you see Hilton is really American, for sure. Mm-hmm. I'm really curious if they're going to acquire somebody, if it's going to be a company outside the US. I don't think so. I think it will be more to keep this American branding, etc. Yeah. So, or are they developing their own kind of?
Yeah, Marriott didn't buy anything.
No. So yeah.
Doesn't.
Well, Marriott has of course, with their own stuff, there with their luxury and with their villas, and Marriott is testing a bit. They're developing by themselves. Hilton, I think it stays quite. You don't hear much from them regarding the vacation rental. Hyatt, I know people from Hyatt. I don't know if they're listening, but they're really focusing on their own loyalty program and everything. When the talks I had with them also in the past, and I don't know. It's just, I think it's also an image, right? And I think it's some Hyatt for me, but I don't know if you agree with this. For me, you always have a kind of a business approach. Quite. If you're looking at the hotels and everything, Marriott is a great combination. I think they have a lot of resorts, they have business, etc. I think still you might see that maybe in Hyatt stays more in the business, even though this is hit quite hard. You can see there's so many trends going on. I think they want to keep this luxury, and I think that also could be a danger, right? As soon, of course, it's all connected to branding and image, and as soon as they go to vacation rental, Marriott goes into villas and luxury segment. So if they go to short-term rental, I think they want to stay in kind of the 5-star kind of feeling experience. So for sure, if they do an acquisition, must be something in the luxury segment, because they will not take the risk as well to go more into less than 5 stars, right? If you go, for example, Best Western, for example, if they will do something more into vacation rental, they have different brands, they have different kind of levels from 3-star, 4-star they have. So For them, it's a bit easier to, I guess so, to do something with vacation rental, because the standards are different when you're comparing it with for example, with a luxury chain. And indeed, also, of course, Hilton has some different brands also in 4-star segment. Might do something more in there. But when a brand is really upscale, if we're talking about the Kempinskis, the Shangri-Las, etc., I think they will not go ever into short-term rental. I don't think so, because then the whole experience is gone. So let's see. I'm really curious. I think it's just the right moment, the right company should fit with what they're doing, right? And there's not so much out there. If I could think about a company which match actually, which this would be makes sense to be part of, for example, of Hyatt, of Hilton, or whatever. I don't know. I also don't know which one makes sense, right? I think they're not really ones.
It doesn't have to be an acquisition. You can tap into your loyalty base like Marriott did, and then capitalize whatever percent on every booking of it.
This might happen, right? Like you're starting partnerships, and you see that Airbnb was always searching, but okay, what are we going to do with hotels? They might go with some loyalty program, and maybe Airbnb going to work together with a few hotel chains, and they can do cross-selling, etc. This could make more sense, in my opinion. Sharing loyalty programs, yes. Maybe eventually you see that they're creating loyalty programs within chains together. I'll not be surprised, to help each other a bit, because of course you might see that there's a loyalty program. We can redeem points, merit points, maybe in a different one. I'll not be surprised if this will appear. Of course, it's pretty tough competition, but at the end they all know each other quite well. The chains want to stay. This whole chain image should stay. You might see some initiative in the loyalty programs, maybe in the smaller ones, and you might see redeeming your points somewhere else. I think as well you see more that, for example, points in air and for example airline points, or those points you might redeem more in hotels, and maybe opposite, to help each other. I think you more see that, for example, Delta will closer work with some hotel chains to redeem points, because they got so many points which has to be used. Opposite, the same to support travel. I think you see more than, I think, shared loyalty programs in not in the same segment.
Yeah, I mean, I think it's going to be interesting when some brands like IHG, who have extended stay hotels, see if they ever get involved in short-term rentals, or if their short-term rental product is an extended stay hotel. I mean, we've all stayed in extended stay hotels, but there is, in my opinion, in my experience, a pretty substantial difference of an extended stay hotel and a short-term rental, just in quality and cleanliness and environment and all of that. But it'll be interesting to see if any of those brands that have big exposure in extended stay do something in short-term rentals, because that's more competitive than Marriott getting involved in short-term rentals, in my opinion.
Well, shameless plug, but we have a mutual friend that was on the podcast, Travis from Marriott, and doing the Homes and Villas program, and they were talking about it. And the one thing that I think, though, like, because we're talking about IHG, I don't think they're getting into the short-term rental game in the way that Accor and Marriott have been, just because, like you said, the extended stay. But the biggest issue for hotel chains right now is, I think, keeping their owners happy, their franchisees, and that's really hard, because definitely COVID has affected not only the main chains properties, but their franchise. And so I think it's like both of you have been saying, it's going to be, it's going to be the right time, the right moment. But then also, I think 2022, maybe end of 2021, the lines between short-term rental and hotel company are going to blur even more, because I definitely know Airbnb can't just stay the way that they are right now. Like, they can't be just a booking platform. They're going to create a point system. They're going to start probably merging or acquiring hotels, or doing the boutique side of things. Who knows? But
for sure, there's a subscription model. I'm just saying this for a while. I'll not be surprised if also Airbnb if it will be there, to see. But I think also they will go into subscription. But let's see. But what you said, it is interesting, right? a lot of things would change actually. And when you're looking at short-term rental, I think it was one of the first episodes we talked about more about apart hotels. I think this might be one of the first moves, right? Okay, they're just going to be a bit in between to go really into short-term rental. It's a bit scary. It's still this whole the franchisees and the agreements. Okay, we might see more like moves. Okay, we're just having complete blocks, for example, with multiple apartments.
Yeah, but the franchisees could buy this building, and they could own the hotel and the extended stay or whatever they want to call it, apart hotel.
Mm-hmm.
So
you might see that they're more starting maybe with some sub-brand, which is actually more like an kind of apart hotel kind of complex. And if it's long stay or short stay, I think it's in the middle. I think also you will see them maybe in short stays. There will be some more apart hotels actually, which is still getting where they try to sell the quality a bit of the image of a brand, but actually make it more accessible and make it more homely and make this whole the benefits of a short-term rental, right? So, but then still be more like branded, and I think that will be more pops up more interesting as well. That they say, okay, complete blocks, which actually doesn't have just a room, but has a kitchen, has some more facilities, and this will be more branded actually. And they're coming with sub-brands. I think there will be bigger chance they go more into this area.
Yeah, I'm gonna say another kind of shameless plug for a guest on the podcast was Orion House. I think more styles of that type of building. Their main business model is to lease out the apartments, whether it's a studio, 1 bedroom or 2 bedroom, but for the tenant to turn on a switch and say open for vacation rental bookings on all these platforms, and it's branded. It's got that professional apart hotel feel. I think that's going to be pretty substantial for what we're talking about as well. Like, again, blurred lines. It's not a hotel; it's an apartment complex, but it's at the end of the day, it's a sustainable business model.
I think in the blurred lines, we talked about WeWork, why you see more like spaces actually, which can be like multi-use, right? So you have some rooms where you can stay if you work over for a few times. It's a room where you can also wait day use, so you're just using this room just for day use. Then there will be rooms you say, okay, now I can also stay over if it takes longer. Then downstairs you have a common space where you could meet with the coffee corner. They have some eating facilities, simple eating facilities. I think it will be more need blurred lines, so it's difficult to give it a clear name what it will be, or what is the naming, but it will be a combination of co-working, of day use. So I think this will be really blurred, and I don't know if there's already like a good naming for it, but it is interesting. I think in these will be more multifunctional, right? And sometimes you just want to use a common space. Sometimes you need a meeting room. Sometimes you just want silence in your own room. Sometimes becoming later, you're in different areas, so you see more like a WeWork kind of memberships. Call it again the membership part, when you can work in different places, you can sleep in different places, and really combine this work and sleep, and probably eat. So,
lifestyle, flexibility, baby.
It will be new lifestyle, yeah.
Well, you're starting the hospitality company called Flexibility Hospitality.
Man, I think the amount of startups we're creating from this show. Awesome. Well, thanks guys for being here. Anything exciting coming up for the next week? Anything you guys want to give, like shameless plugs or anything like that? Anything for the audience to take away?
I think maybe we're talking often about business ideas. It will be nice to address something like a business idea and let the listeners giving some feedback, right? To validate directly that does it make sense or not. And then somebody can pick it up, one of the listeners, but it's interesting to address some business models, some business ideas and stuff. And we often do coming with different ideas. I just know a few that we addressed before, but it is interesting. And again, to see, okay, where is the line, right? Is it really, what is the name? If it's a short-term rental, is it going to be long? We talk so many names. Is it going to be long-term? I think it will be more flexibility. In the Netherlands, for example, you have the student hotel. This is like kind of, they have rooms, pretty convenient. Downstairs, you have a restaurant. You can work from there. They were first targeting pretty like the students. You can have it for 1 month stay. You can rent it for half a year. If you want to use it for a few nights, it's also available. So they have a specific numbers of rooms allocated for this, and really flexibility. And I think that's also, we talk so many times about the keyword of 2020, flexibility. Will be different flexibility in this year, I guess so. But I think if you're looking at hospitality and blurred lines and how you're staying, how you're working, how you're traveling, it will be really flexible.
Yeah, I mean, I was supposed to have 3 trips this month, but I have zero because that's the world we live in. So the flexibility piece is key, and I would love to have the local hotel here in my town have rooms available for working, but they don't. So they're missing an opportunity. But
Yes.
flexibility, hospitality, here we go.
All right. Well, thank you guys.
Connectivity.
And connectivity, yes. Yeah, thank you guys for showing up. And then thanks for all the listeners who tuned in. And we'll see you guys, obviously, next week.